Good afternoon or good morning. I'm your host, Christine Glazeman with This is Benefits TV, and I'm going to be going over 10 considerations as a small business employer that you should think about when you are considering offering employee benefits for the first time. So this is, when talking about employee benefits, we're talking about major medical, maybe dental, vision, maybe 401k. I'm going to stick with mostly the core benefits today, major medical, dental, and vision, and supplemental. So real quick here, the first thing you want to think about is single carrier versus multiple carrier. So here where I'm located in Greater Sacramento area, we have a lot of choices, and small business employers can choose from one single carrier like Kaiser or Anthem Blue Cross. We also have a platform that allows employees to choose from multiple carriers, actually up to 7 different carriers. So you're going to want to think about that. And that can be largely determined by the group size, how many you anticipate who would actually enroll. We find that the really small groups, that is under 4 employees, tend to do, more often they tend to choose a single carrier plan option, whereas when we have 4 or more enrolling, then they tend to gravitate toward having more choices. But you as an employer are going to want to think about what's the demographic of your employees. Are they savvy? Can they handle a lot of choices? Would they like a lot of choices for their coverage? Or would it be better to just offer a single carrier with maybe 1 or 2 plan options? So there's lots of different options, and it depends all on your geographic region. So next thing you want to think about, and this ties to the first point, is what doctor networks do your employees use, or what doctor networks do they want to use? So that is definitely a consideration in the Northern California area. We have lots of different medical groups and different networks. Where I am at in the Greater Sacramento area, we have UC Davis, we have Mercy Medical or Dignity Health, we have Sutter, we have Kaiser, and I think I mentioned UC Davis, but those are the main ones. And so there are going to be certain plans that work only with certain networks. And so it's a good idea to find out what your employees' needs are that way, and that can really help steer you in the right direction for which insurance carrier you're going to look at. Next thing you want to think about, and this is really important, is your employer contribution. So the minimum requirements per the ACA, the Affordable Care Act for small business, is a 50% employer contribution to the employee only towards the lowest price plan offered. And out of all the different plans that are available, gold and platinum, silver and bronze plans are the least expensive. And but however, we are in a very tight labor market where we are right now in 2022. So what we find is many small employers tend to base their employer contribution off of a gold level plan, which is mid to the higher range in the whole span of levels of employee benefits. Now, contributions for employees' dependents, that is spouses and children, that is entirely optional, but you will definitely set yourself apart as a small employer when looking to offer a competitive employee benefits package, is if you consider contributing something towards the dependent premium, because not a lot of employers do. So the next thing is the premium only plan. And you're only going to know about this if you're very savvy and have an understanding of tax laws when it comes to employee benefits. So the premium only plan, it's also called the POP. It is tied to the Section 125, which is a section of the IRS code that allows small employers to deduct employee contributions for benefits on a pre-tax basis. You're definitely going to want to put that in place once you do enroll in a small business plan. This can save quite a bit on taxes for your employees and for you as well as the employer. And there's lots of different places where you can get a POP plan. There's different vendors, and it's always wise to check with your broker on this because they can tell you which sources are going to charge you a yearly fee for this versus a one-time fee. One-time fee is always better. Next thing you're going to want to think about is ERISA compliance. So ERISA stands for Employee Retirement Income Security Act. And it was enacted originally in 1974. And originally it only encompassed employee retirement plans, but now it has expanded its reach to anything that is defined as a employee health and welfare plan. So that is now going to include your major medical, also your dental and vision coverage, as well as 401k. So there are some compliance requirements for major medical plans with regards to ERISA. And so there's certain language and there's certain documents that are required to be distributed to employees each year that need to be ERISA compliant. And of course, you can do this in-house if you have a HR manager who is familiar with ERISA law and knows how to prepare these documents. However, most small businesses will outsource this type of service, and there are companies who will provide ERISA compliance support as well. Next, you want to think about your new hire waiting period. So in the federal law is, according to the ACA, you cannot make an employee wait more than 90 days for benefits. California is a little bit different. The California law states that the longest waiting period an employee can wait is first the month following 60 days from the date of hire and not to exceed 90 days. So in some cases, it may be just a little bit shorter. So next thing is open enrollment and eligibility rules. So when I say open enrollment, I'm referring to the renewal period and what you can do, what employees can do, and what employers can do during that time period. When it comes up time for the policy anniversary, employees who are eligible but are not enrolled, that is, they've satisfied their waiting period, they can enroll at this time when they don't need a qualifying event. Any existing employees who want to add a spouse or children, they can, or domestic partner, they can also add them onto the plan at this time. Employees can change to a different plan if more plan options are offered. And employers can make plan changes as well. So something really important on the topic of new hires. So if, let's say as an example, an employer has the 60-day waiting period. If an employee goes past that 60 days, there are some carriers who will enroll retro to that first of the month following 60 days from the date of hire, as long as that application is, the enrollment form is received the same month that they are effective. However, not all carriers do that. You really want to try and avoid any scenario where you're submitting enrollment paperwork later after the fact, because it starts to get, it's a little more dicey on getting them coverage and death. And if it goes too long, then that employee has missed their window and they cannot enroll until throughout the year unless they have a life qualifying event. Life qualifying events are things like moving to a new service area, losing other health coverage, losing Medi-Cal, getting married, getting divorced, having a baby, adopting a child, things like that. That's a really important thing that you need to pay attention to with your new hires, is make sure that they get their enrollment form submitted on time. Next, you want to consider dental and vision. Are you going to offer dental and vision? And it's always recommended to a minimum offer it on a voluntary basis. Voluntary means that the employee pays for it, not the employer. Now, I will say that in general, you can get better rates if you as the employer do opt to contribute toward the dental and vision plans. But more often than not, employees always ask about dental and vision Even in scenarios where only medical is offered, they're always asking about dental and vision. And if there's a spot in a medical enrollment form for dental and vision, they will check it, even if it's not offered by the company. So group life, this is another additional little benefit, kind of goes in the same category of dental and vision. And face amount, so it's guaranteed issue. That means that there's no medical questions or exams that need to be completed. But it is extended for the whole group. Many times, if it is going to be offered, it is required to be 100% employer sponsored. And in that case, they do need 100% participation on that. Group life, though, especially for the lower face amounts like 10,000, can be very inexpensive. I've seen rates all the way down to $2 per month per employee. So it's a very nice extra little benefit to have for employees. Last, you might want to consider voluntary benefits. And we say voluntary, meaning that you're offering the opportunity for the employee to purchase extra benefits with their own pre-tax dollars. Probably the most popular and most well-known voluntary benefit is AFLAC. And AFLAC pays employees in the event of an accident or critical illness. This helps to offset the income loss to an employee in the event they have time off of work from an accident or illness. During that recovery time, they're not working, they're not bringing in income. So AFLAC will pay that employee and help mitigate some of those losses. This can also help when you have a caregiver involved. Most of the time, in the event of an accident or an illness, there's someone caring for that employee, and they are missing work as well too. And so it can be a really valued extra benefit to offer AFLAC as well. And so that's all I have for today. If you have any other questions about employee benefits, you can reach out to me via my website in the description below. And thanks again, and we'll see you in the next video.